Mastering Trading Psychology. 3 Simple Steps to Reduce Fear and Make Accurate Decisions. Welcome back to the V-Invest channel, where we dive deep into the mindset and psychology that drive successful trading. Today, we're tackling a topic that holds so many traders back. Fear is an illusion. Mastering your inner game. Have you ever hesitated to enter a trade because you were afraid of losing? Or maybe you exited a winning trade too early because you feared the market would turn against you? Fear is one of the biggest obstacles in trading. But here's the truth. Fear is an illusion. It's a product of your mind, not reality. In this video, we'll explore why fear feels so real, how it sabotages your trading, and 3 practical principles to overcome it so you can master your inner game. Let's dive in. First, let's understand what fear really is in the context of trading. Fear is an emotional response to perceived danger, often triggered by uncertainty. In trading, this might look like the fear of losing money, the fear of missing out on a big move, or even the fear of being wrong. But here's the thing. The market doesn't care about your fears. It's just a system of probabilities, moving based on supply and demand. The danger you're afraid of, like a losing trade, isn't a real threat to your survival. It's just a story your mind creates, an illusion that feels real because of how your brain is wired. So why does fear feel so overwhelming? Psychologically, fear is rooted in our survival instincts. Our brains are designed to protect us from danger. So when we face uncertainty, like a volatile market, the amygdala, the fear center of the brain, kicks into overdrive. It floods your body with stress hormones like cortisol, making you feel anxious, hesitant, or panicked. In trading, this can lead to irrational decisions, like skipping a good trade setup or overreacting to a small price dip. The good news? You can train your mind to see fear for what it is, an illusion, and take back control. To master your inner game and overcome fear, we'll focus on 3 key principles. Acknowledge fear without judgment. Reframe fear as a signal, and act despite fear with discipline. These principles will help you transform fear from an enemy into a tool, allowing you to trade with confidence and clarity. Let's break them down with real-life examples. Principle 1. Acknowledge fear without judgment, don't fight it. The first principle to overcoming fear is to acknowledge it without judgment. Many traders make the mistake of trying to suppress their fear, telling themselves, "I shouldn't be afraid. I need to be confident." But this only makes things worse. When you fight your fear, you give it more power. Instead, accept that fear is a natural part of trading, and even the best traders feel it. By acknowledging it without judgment, you take away its emotional grip. Psychologically, this works because it reduces the secondary stress of resisting your emotions. When you judge yourself for feeling afraid, you create a cycle of shame and anxiety, which amplifies the fear. But when you simply notice it, saying, "I'm feeling fear right now, and that's okay," you create space to respond rationally rather than react emotionally. Let's meet Sarah, a crypto trader I'd like to introduce. Sarah is trading Bitcoin on the daily timeframe. She has a solid strategy. Buy when the price breaks above a key moving average with strong volume, and set a stop loss below the recent low. One day, she spots a perfect setup. Bitcoin breaks above the 50-day moving average at $45,000 with high volume. She knows she should enter a buy trade, with a target at $48,000 and a stop loss at $43. But as she's about to place the trade, fear creeps in. She thinks, "What if Bitcoin crashes again like it did last month? I could lose $2. Instead of acknowledging her fear, Sarah tries to push it away, telling herself, "I shouldn't be scared. I need to be brave." But the fear doesn't go away. It grows stronger. She hesitates, misses the trade, and watches Bitcoin climb to $48,000 as predicted. Sarah missed out on a $3,000 profit, all because she couldn't accept her fear. When Sarah fought her fear, she gave it more power. Instead of focusing on her strategy, the breakout, the volume, she got caught up in her emotions. If she had acknowledged her fear without judgment, she might have said, "I'm feeling scared about a potential loss. And that's normal, but my system is telling me this is a good trade." This would have allowed her to act on her plan rather than her emotions. A trader who masters their inner game doesn't try to eliminate fear. They accept it as part of the process. Start by noticing your fear when it arises. Don't label it as good or bad. Just observe it. You can even say out loud, "I'm feeling fear right now." And that's okay. This simple act of acknowledgement can help you stay grounded. Over time, you'll notice that fear loses its intensity when you stop fighting it. Another technique is to practice self-compassion. Treat yourself like you would a friend. If a friend told you they were scared to trade, you wouldn't judge them, you'd support them. Do the same for yourself. Remind yourself, it's normal to feel this way. Trading is uncertain, and I'm doing my best. This mindset helps you stay calm and focused. Try this in your next trading session. When you feel fear, pause and acknowledge it without judgment. Write down what you're feeling and how you respond. You'll see that simply accepting fear helps you make clearer decisions. Principle 2. Reframe fear as a signal. Use it to your advantage. The second principle is to reframe fear as a signal, not a threat. Fear often feels like a warning to run away. But in trading, it can actually be a useful indicator. Instead of seeing fear as something to avoid, view it as a message from your mind, pointing you towards something that needs attention. By reframing fear, you can turn it into a tool for better decision-making. Psychologically, this works because it shifts your perspective from a reactive state to a proactive one. When you see fear as a signal, you engage the prefrontal cortex, the rational part of your brain, rather than letting the amygdala take over. This allows you to analyze the situation logically and respond with intention. Let's meet James, a stock trader. James is trading Apple stock on the 4-hour timeframe. His strategy is to buy when the price breaks above a resistance level with a bullish candlestick pattern, setting a stop loss below the breakout point. One day, he spots a setup. Apple breaks above $150 with a strong bullish candle. He plans to buy, with a target at $155 and a stop loss at $148. But as he's about to enter, fear strikes. He thinks, what if this is a false breakout? I could lose $500. Normally, James would let this fear stop him. But this time, he decides to reframe it. He asks himself, what is my fear trying to tell me? He realizes his fear is pointing to the risk of a false breakout. So, he double-checks his setup. The volume is high. The trend is bullish. And there's no major news that could cause a reversal. His fear has actually helped him confirm his analysis. James enters the trade, and Apple hits $155, earning him a $1.000 profit. By reframing his fear as a signal, James turned it into an ally. Instead of letting fear stop him, he used it to sharpen his focus. He asked, what is this fear telling me? And used the answer to validate his plan. If he had seen fear as a threat, he might have skipped the trade and missed out on a great opportunity. A trader who masters their inner game doesn't run from fear. They listen to it and use it wisely. When you feel fear, ask yourself, what is this fear trying to tell me? Maybe it's highlighting a risk you haven't considered, like a news event or a weak setup. Or maybe it's reminding you to stick to your plan. Use fear as a prompt to double-check your analysis. But don't let it dictate your actions. You can also reframe fear as excitement. Physiologically, fear and excitement are very similar. Both involve a racing heart and heightened alertness. So, when you feel fear, tell yourself, this is just excitement. I'm excited to take this trade because I trust my system. This simple shift in language can change how you experience the emotion. Try this for your next 5 trades. When fear arises, reframe it as a signal. Ask, what is this fear telling me? And use the answer to guide your analysis. Write down how this approach affects your trading. You'll see that fear can actually help you trade better when you use it as a tool. Principle 3. Act despite fear with discipline. Courage is key. The third principle is to act despite fear with discipline. Fear will always be there, but it doesn't have to control you. The difference between a successful trader and a struggling one isn't the absence of fear. It's the ability to act in spite of it. Courage isn't about feeling fearless. It's about doing what needs to be done even when you're afraid. Psychologically, acting despite fear helps you build emotional resilience. Each time you face your fear and take action, you train your brain to see fear as less threatening. Over time, this creates a positive feedback loop. The more you act despite fear, the less power it has over you. In trading, this means sticking to your plan, even when your emotions are screaming at you to do otherwise. Let's meet Emily, A Forex trader. Emily is trading the EUR/USD pair on the 1-hour timeframe. Her strategy is to sell when the price breaks below a support level with a bearish candlestick pattern, setting a stop loss above the recent high. One day, she spots a setup. EUR/USD breaks below support at 1.1000 with a strong bearish candle. She plans to sell, with a target at 1.0900 and a stop loss at 1.1050. But as she's about to place the trade, fear takes over. She thinks, what if the price reverses and hits my stop loss? I could lose $300. Emily feels the urge to skip the trade, but she remembers her principle. Act despite fear with discipline. She reviews her plan, confirms the setup is valid, and places the trade. The price drops to 1.0900 as predicted, earning her a $500 profit. By acting despite her fear, Emily not only made a profitable trade but also built her confidence for future trades. Emily could have let fear stop her, but she chose to act with discipline. She trusted her system, followed her plan, and reaped the rewards. If she had given in to fear, she would have missed out on a great trade and reinforced her fear for the future. A trader who masters their inner game knows that courage is the key to overcoming fear. To act despite fear, you need a solid trading plan. Before entering any trade, define your entry, target, and stop loss. Once your plan is set, commit to following it, no matter how you feel. When fear arises, remind yourself, I've done my analysis. I trust my plan, and I'm going to act. Another technique is to start small. If you're afraid to trade a full position, reduce your size. For example, if you normally trade 1 lot, try 0.1 lots. This lowers the emotional stakes, making it easier to act. As you build confidence, you can gradually increase your position size. You can also use a pre-trade ritual to boost your courage. Before placing a trade, take a deep breath, visualize yourself executing your plan, and say, I'm acting with discipline, no matter what. This ritual helps you shift from fear to action. Try this for your next 10 trades. Commit to acting despite fear. Follow your plan, even if you feel afraid. Write down how it feels and the results. You'll see that acting with discipline helps you overcome fear and trade more consistently. Lessons from legends. Paul Tudor Jones and George Soros. To bring it all together, let's look at 2 trading legends through the lens of mastering fear. First, there's Paul Tudor Jones, one of the most successful hedge fund managers of all time. Jones made billions by predicting the 1987 market crash. But he wasn't immune to fear. He once said, "Every day I assume every position I have is wrong." This mindset allowed him to acknowledge fear without letting it control him. By assuming he could be wrong, he prepared for the worst, which gave him the courage to act despite uncertainty. Jones mastered his inner game by using fear as a signal to manage risk, not as a reason to avoid action. Then there's George Soros, who famously broke the Bank of England in 1992, earning over $1 billion by shorting the British pound. Soros was known for his ability to act despite fear. He once said, "It's not whether you're right or wrong that's important, but how much money you make when you're right and how much you lose when you're wrong." Soros didn't let the fear of being wrong stop him. He acted with discipline, focusing on risk management. His courage to act, even in the face of uncertainty, is what made him a legend. Start small. In your next trade, try practicing one principle. Maybe it's acknowledging your fear without judgment. Maybe it's reframing fear as a signal to double-check your setup. Or maybe it's acting despite fear by sticking to your plan. Build from there. Trading isn't about being fearless. It's about mastering your inner game. And that comes from facing fear head-on. Mastering your inner game isn't just about trading. It's about life. When you learn to see fear as an illusion, not a reality, you'll find the confidence to take on any challenge. In the market or beyond, the market will always be uncertain. But with these principles, you'll navigate it with clarity and courage. What do you think? Have you ever let fear stop you from taking a trade? How do you handle it? Share your thoughts or stories in the comments below. I'd love to hear them. If this video resonated with you, please hit the like button, share it with your trading group, and subscribe to V-Invest for more deep insights into trading psychology. Don't forget to click the bell icon so you don't miss any new videos. Thank you for joining me on this journey. Face your fears, master your inner game, And I'll see you in the next video.